Welcome to Credit Monster, where high limits are achievable and bad credit is beatable. It's your boy once again, legendary Daquan, back in the mix. Listen, y'all, we're going to talk about a very important topic today. And y'all know I don't like wasting time on introductions, but you know what to do. Like, comment, share, subscribe. Share the information as much as possible so more people could benefit. But let's get straight to the topic. These are the top reasons why people have bad credit. Even I had bad credit, and I'm still I'm still working on some things on my credit, and we're going to talk about all that. But let me tell you, listen, the number one reason why people have bad credit is just the sheer ignorance. It's just the lack of knowledge, the lack of understanding on how credit work. And the reason for the credit, see, here at the Credit Monster, my ultimate goal is to make sure you're financially literate, not just with credit, because credit is one small piece of the financial puzzle. It's finances and wealth building is basically a broad topic. Credit is an essential part in all of that, because it's a lot of it's a lot of stuff with credit. Listen, like, we're gonna really get into it. Like, it's a lot of stuff, but see, your financial foundation is what determine your credit. If you don't have the proper financial foundation, as far as, you know, good saving habits, good spending habits, good management habits with your money, you are more likely to have bad credit. And really, if you don't understand credit, you don't understand the implications behind having bad credit and the reason why you shouldn't have bad credit. And you should do everything possible to not be in that situation. You don't want to put yourself in a bad position. That's the ultimate thing. So we know that we need to do things in life. As we get older, we want to buy a house, we want to get a car. We don't have 10, 20, $100,000 in the bank to spend on cash. It's going to take us years to save that. So what credit is, let me tell you what credit is. Credit is to leverage. It's to leverage other people's money. I know a lot of people, I will hope that you read the book Rich Dad Poor Dad. Robert Kiyosaki explains this. He says he doesn't use his own money to invest. He uses other people's money. And for the longest time, I saw comments in the comment section on some of his videos saying, what does other people's money mean? Like, what do you mean by other people's money? It's literally taking a loan from the bank and I'm using other people's money, because you know when you deposit into the bank, they take that money and give it to other people and they make money off of your money. That's the business. That's the credit business. You know, that's the lending business. Same thing. All this is synonymous. The thing is, you gotta be able to leverage other people's money and to use it to build wealth, or to use it to your benefit, and be able to be responsible to pay it back. And this is what generates a credit score. It's very deep. You gotta understand the reason why we have credit in the first place, and this is one of the reasons why America is one of the wealthiest countries in the world, is because we have a robust credit system. It's not fair to the people who don't know better. The number two biggest reason why people have bad credit is the misusage of credit cards. Now, the credit utilization, which is your credit card limit against how much you actually owe, is 30% of your credit score. Now, that's a huge portion of your credit score. That means if you have $100 credit limit and you owe the bank $80 off that credit card, and you hold that balance each and every month like you're just paying the minimum, then that means your credit utilization is 80%, which is going to drop your score a lot. Even if you paying your payments on time, it's still going to drop your score. You don't want your utilization to be that high. I'm not saying you shouldn't use credit cards, because you absolutely should use your credit cards for the reward benefits and also the security that it provides as far as identity protection. But however, do not keep a balance on your credit card. When you keep a balance on your credit card, you're actually trying to use future money to pay off your current bills or your current expenses. Like, you should not do that. You should actually budget and and plan for your purchases. This is what a credit card is for. It's to plan your purchases. You are purchasing things that you already done purchased, and then when your paycheck come, you pay it right off. You don't want to hold a balance for 30 days because the credit card interest rate, which is what you pay the bank to loan you money, is astronomical. It's like some of the highest interest rates that you could ever pay. So you really don't want to pay credit card interest, and especially today in this economic times. The thing is, credit card interest rate is variable, meaning it could change at any given time. I know one bank is actually charging about 31% in interest right now on their credit cards, which is insane. Imagine paying 31% interest. Like, if you know, like, that is crazy. Just think about it. A mortgage interest rate is normally about 4 to 5%. Think about paying 31% on a credit card, especially if you owe like $1,000, $2,000, $5,000, whatever you owe in that credit card. 31%. My goodness. Yeah, you don't want to do that. Credit card debt crushes a lot of people. They don't really realize that, you know, holding the balance is not just damaging your credit score, but it's also putting you way back, because the bank is going to charge you enormous interest on top of your minimum payments. You don't want to just pay the minimum. You want to pay them off as fast as possible. I'm coming out with another video to show you how to get rid of that credit card debt, and then you just want to use the credit cards for future purchases that you already know that you're going to buy, that you already know that you're going to get a paycheck for. You're going to use that paycheck to pay off the credit card, because you use that credit card as an extra layer of security. There's tons of liability protection built into credit cards, and is not actually touching your actual bank account. So you definitely want that extra layer of protection when you get there in that space where you are managing your money, and you could transition to using credit cards only and not debit cards. But until then, you know, budget your money and make sure you're comfortable with your bills, and make sure you making enough money to live, and then you could go ahead and start using credit cards a little bit more freely as far as planned purchases. But you must stay disciplined with your credit cards, because if you don't, and you don't really know, like, okay, like, it's bad to carry a balance, because that's a common misconception. A lot of people just think that it's okay to just pay the bank money, and that's going to make them like you. No, that's not going to make them like you. That's going to make them feel like you're irresponsible with your money, because the philosophy behind it is that if you're using your credit cards to extend, it's basically an extension of your regular income, and you're living above your means, then you are more of a risk. That means your credit score goes down, because you are a risky borrower, because you live above your means. That is the general concept behind a credit card utilization ratio. Reason number 3, and this is a very easy to avoid reason. It's very easy to avoid this trap right here, is that you don't communicate with your lenders. Okay, so like, I know a lot of people who owe on student loans, and now they got missed payments on their student loans and things, especially during COVID. And the thing is, it was a lot of federal protections during COVID that would have, you know, prevented you from having missed payments even if you didn't pay. So the thing is, it's because you didn't call them and say, listen, I'm out of work, or I went back to school, I need to get that, you know, extension or whatever they call it. I can't even remember right now. But you have to communicate with the lenders. If you can't make a payment, call them and try to work something out, because you don't want to miss payment. And just to keep in mind, if you have if you're late 10 days on the credit card, it's not going to report as a late payment on your credit report. It's only a late payment after 30 days of being late. That's when they report on your credit report. However, with the institution itself, they do document that late payment, that you was a few days late at the institution, but it won't affect your credit score that much. Now, it's a lot of institutions out here, so you might care about that or you may not, but it depends on your situation. I mean, overall, you don't want to have missed payments or late payments or anything like that in general. But if you are in a situation where you have to, you know, tighten up a little bit, then, you know, you could probably get away with a 10-day late payment on a credit card and not affect your credit score. However, you may get late charges on a credit card, or late charges or any type of loan. So you got to keep that in mind. You want to be able to pay all your debts like all your minimum payments if you have that. But that's why you shouldn't even keep a balance in the first place on a credit card. Like, I understand a car note, I understand a mortgage, I understand maybe a personal loan, I understand like all those things, like there's minimum payments like that you have to do. But at the same time, when it comes to a credit card, that's going to actually make your budget tighter, because you got to pay these minimum payments on these credit cards. And I get it, man. We went through COVID, we went through other stuff, we went through like just learning all this stuff. So I understand that a lot of people have balances on their credit cards and they're just trying to pay it off. You got to focus on paying them off, man. So that's going to actually improve your credit score, just doing that and being able to live at the same time. Because back to the last point is, you're not living above your means, you're living within or below your means, which is a good financial habit. You want to get into the habit. Do not communicate with the lenders. If you're, especially student loans, oh my goodness, student loans should not be damaging your credit score. Like, you should have been called student loan people and said, listen, I can't make a payment, I'm not making money, I'm unemployed, whatever you got to say, whatever the situation is. You should be communicating with them. They're the easiest institution to avoid making payments to. So communicate with the lenders, okay? Get on top of your financial health, man. Get on top of your financial well-being. Communicate with, this is important. This is important. If you with like self-lender or credit strong and you have missed payments over there, it's really no excuse. Call them and cancel it. They'll give you your money back. Whatever is in the savings, they'll give it to you. There's no reason for you to have missed payments with freaking self-lender, bro. Like, credit strong. These are supposed to be helping you, not hindering you. Call them and tell them you can't make the payment and you need to get the refund, or you need to cancel the thing. If that's what it is, you can't cancel a car note. But if you have a car note, you can't make a payment on time, you need to call them. I'm not saying that it's going to prevent you from having a late payment if you're 30 days late, but you could negotiate something. Maybe they could redo the loan. Like, there's been plenty of times when, like, 3 years ago when I had my car and I couldn't make a payment, and they had refinanced my car for me and made it an 84-month loan instead of a 72-month loan, and made my payments lower and move my due date. And it helped me. I was able to make those payments at that point. So that's because I called them and said, hey, I can't make these payments. You make sure you communicate with the lender so you could, protect your credit score. And that's one of the biggest traps, is the lack of communication. Let's go on to the next point. Okay, y'all, this reason is more of a reason that a lot of people don't practice. A lot of people don't practice this reason at all. Okay, so reason number 4 is the lack of a budget. Okay, now I know y'all gonna hate me for this, but listen, if you want to produce financial prosperity, you gotta plan for it. It's not going to just come. It's not going to just happen. You have to plan for your financial you gotta plan, yo. You got, like, it's just simple as that. And a plan of financing is called a budget. Okay, so if you don't have a budget, you're not going to be able to manage. You're not going to be able to manage your money. And if you're not managing your money, you just living life, and then you go get a mortgage, and you just go get a car note, and you just go get some credit cards. Eventually you're gonna be like, damn, I got all these bills, I'm living paycheck to paycheck, because you never even saw it coming. It just it just smacked you, like, bah, like it just smacked you. Like, you never saw it coming because you never planned for it. You never looked ahead and said, oh, I'm gonna have this bill, but I only make this much. I can't afford that. It never hit you until it hits you. You know what I'm saying? And a lot of us just got stuck in that, yo. And I mean, it's unfortunate, but we got to get on the right track moving forward. You got to have a budget. You got to plan for your finances. You got to plan for your bills, your expenses. So you know that after all your bills, after all your obligations, you have X amount of money left over where you can save it. And when you save it, then you can invest it. You see what I'm saying? You can never build financial prosperity without investing. we already know that. That's like common sense, right? I will hope. But we gonna get really deep into that. This is where I want my channel to go. I want to talk about finances in a holistic way. I don't want to just talk. I know it's the credit monster, but really credit is a byproduct of good financial management, and that's why number 4 is very pivotal, because not a lot of people know about it. Like, not a lot of people really budget. Not a lot of people have a savings because they don't budget. It's all about your financial management, and that's what truly affects your credit score at the end of the day, is your financial management habits. You really got to get on it. So that is number 4, and I'm so happy that y'all made it to the end of the video. Listen, if you made it to the end of the video, go ahead in the comment section and comment committed, because you committed to building financial prosperity and financial well-being for you and your family. Make sure you like, comment, share, and subscribe to the Credit Monster, and I'll catch y'all in the next one. Peace.